Hello, good morning, and welcome to Business on Newsdesk. President of the Ghana Chamber of Commerce and Industry, Nana Appiah Dankwa-Woso I, says the incoming NPP administration should consider reducing interest rates to at least 18% in the short term for industries to thrive and remain competitive. Latest report by the World Bank on the ease of doing business saw Ghana go up 3 places from 105 to 108 out of 190 countries surveyed. However, the central bank has consistently maintained the policy rate at 26%, a situation which has influenced rising interest rates by commercial banks. Speaking in an interview with Joy Business, Nana Dankwa-Woso said the incoming administration should consider implementing prudent fiscal policies that will ensure the growth of local industries.
The Chamber of Commerce, as a leader of the private sector, will be looking at certain things that will push businesses to thrive and thrive well on short term, medium term, and long term. And on that, on the short term, we'll be looking at tax initiatives. I think the Private Enterprise Federation talked about tax regime, and I think taxes are on the very high side so far as we are concerned, and we expect that some of these taxes will be brought down, and secondly, the tax base will be widened so that they will get what is expected of them to use those monies to develop the nation. If it's reduced, it has a long-term effect on the prices and the cost of production as well, because most of the industries in this country import raw materials. Those that are not even imported, it's difficult to come by. And so if there's reduction of taxes on imports, it also brings down cost of production. And in the long run, the prices of goods and services will also come down. So I think it will have effect on the economy as well. If you want to increase production of cocoa, there's no way you can use 3 months or 6 months to do that. You need to come up with interventions, and so the effect will be within the maybe after 1 year or 2 years. So on the interest rate, if it will come down to about 18% or even less, we will appreciate that, because more people will want to put their money into businesses so that a lot of people can get something to do, and also they'll be able to pay the interest on time. You could see a lot of litigations at the court because people are not able to pay principal plus their interest because businesses are not good. But what I also expect is that they continue to create enabling environment for the private sector to thrive.
Now, the Deputy Managing Director of the Ghana Stock Exchange, Eko Afeji, says appropriate strategies are being explored to revamp the stock market. The Ghana Stock Exchange has for some time now been recording low volume of transactions by various listed companies.
One would ask that, so there's been some price appreciation already with respect to the 3,000 shares that have exchanged their hands. The price has gone up from 2 Ghana cedis, 65 pesos, to 2 Ghana cedis, 85 pesos. What accounted for that one we asked?
Up is the first day of trading. Normally prices move up or down depending on demand and supply situation. So we hope to see what will happen when their results start coming out, financial results, etc.
What are you doing to improve the market performance, because it's at this record low? What are you doing to whip up interest in the market for those who have invested in the market to get value for money?
We're going to do a few strategic things next year. One is to aggressively pursue listings on the market, get more companies to be listed. We also try very hard to continually educate investors so that at least we can improve liquidity on the market. Liquidity is basically a function of buying and selling of shares. So if you don't have people buying or selling, then liquidity is low. Thirdly, we want to increase the number of shares on the market. So companies are gradually being asked to float bigger or larger volumes of shares or higher quantities of shares so that we can have more shares being traded on the market. The other last thing we'd like to do is to use technology. We're going to introduce more features in our system. We'll have what we call borrowing and lending. Now that we have the new securities industry law, borrowing and lending is simply you borrowing the shares from people who are not selling them or doing anything with them and going to the market to sell and paying back later on. That's an interesting feature. We'll be looking at market making where we can have institutions or intermediaries standing in there to buy and sell all the time to provide liquidity on the market. So these are a few things that we'll be introducing next year to boost the liquidity on the market so that retail investors can see some activity on the market.
And that's all in business for now. We come away again with more business news updates at midday. My name is Emmanuel Abuaji. We are